Satish, what do you make of the earnings for Q4, at least for the quarter gone by? To your mind, are there any clear set of gainers and losers?
I think Q4, clearly what has happened is cement sector has been under pressure. We've seen banks actually being under pressure. We did not anticipate banks.
PSU banks did all right.
PSU banks did all right, but the street was expecting slightly better results. I think there has been a fair bit of pressure on their balance sheets due to NPL provisions. I think that's something which was a bit of a negative surprise for us. In terms of gainers, really nothing, or positive surprises, really nothing. A lot of it was already factored in. And therefore, we think that probably margins are probably consolidating at these levels, and one should look at probably margins coming down in the medium term. So that's something which we need to focus on.
So, broadly speaking, now that you have really indicated that your market preference is not to buy aggressively right now, you will wait for a much more sharper and a deeper cut to buy aggressively. Are you sitting on high cash levels which you historically don't maintain but you're currently maintaining?
We are sitting on 10 to 12% cash, and we are fairly comfortable with that, and we are willing to forsake outperformance on good days because we think that there would be a sharper and deeper correction.
But you don't have plans to take cash levels to 20-25%, not a very aggressive cash?
I think if the markets do go up, we will be more than happy to give up the stocks and keep cash.
Where would you like to take some chips off the table, where you think that markets are mispricing growth on the higher side, and you would sell the strength rather than buy the decline?
Quite frankly, I would be doing it for any stock that goes up right now, because I think the market sentiment is quite weak. But I think IT is one space where we think that the expectations are very high in the street, and therefore a strong rally in IT would tempt us to
Even though dollar is supportive?
Dollar is supportive, everything is conducive right now, but the medium-term picture is that probably the INR would gain strength. So regardless of what happens on the short term, I think valuations are fairly rich, especially for the top-tier companies. And that's something which we would look at trimming if the markets do go up.
And you're really sounding bearish to me. Fund managers normally don't sound that bearish because they are long only guys. What could be the next big trigger for the markets on the upside?
I think the consumption story in India is still not yet over. I think we're going to see a lot of evolution of consumption story taking place, and it can be across various products, goods, services. What we think is that travel is going to be a large service industry which has not been tapped in a meaningful manner. We also think hospitality business is going to be a fairly big business, because Indians traveling within India is going to be a fairly large business. And the third thing where we think consumption is going to happen is in terms of white goods, regardless of whether it be air conditioners, fans, lights. As electricity is made available to rural India, the number of connections in the house will increase. So far, rural electrification was considered as one light per house, and if we actually look at rural electrification, it would mean that people would actually want to have the entire gamut of things that an urban dweller has.
What do you own there?
We don't own anything, but we are watching, because we think that prices have run away for the time being. But we are clearly watching this theme as one of the themes that would be a longer term theme rather than a shorter term theme.
You know, for someone who genuinely made pots and pots of money in buying Unitech in 2005, 2006, what is your next big structural bet?
I think structural bet would be consumption, and we think that structural bet is something which we could actually grow over many years. The only thing that we need to understand is that it is competitive. It's extremely competitive industry. So we need to focus on companies that have got a well-defined business model without too much of capital outlay, who have capital efficiency built in all across the value chain. And that's really what we are focusing on, studying companies in depth to understand whether this could be the next structural.
Do you like real estate? Like I mentioned that you caught the real estate curve or the real estate cycle ahead of the curve.
Yes, to some extent it was my predecessor who had got the real estate curve right. But having said that, it's the main thing about real estate is that you need to look at the intrinsic valuations and the value gap. We need to bear in mind that India went through a huge liquidity surge over the past 5-7 years.
You don't like real estate stocks now?
I don't think I would look at real estate as a sector to invest in at this point in time. Prices in the metros, mainline metros, have gone up way too much. Even though construction activity is going on briskly in the smaller towns, I would not think that real estate is something which one can make pots and pots of money. And there is equal downside risk as there is of upside returns.
What about the recent government disinvestment drive, the IPOs and FPOs? Have you participated in anything?
Yes, we have participated selectively. I think one of the things where we made a fair bit of money was REC. I think REC did a fantastic job in terms of the pricing. It was well priced and we made money. As always, we try to find out if the stock is above its intrinsic worth or below its intrinsic worth. And we have no hesitation to give a good IPO.
But you like that business, the power finance business? You have PFC there, you have REC there.
Yes, we think that's a structurally long-term story because eventually these companies will morph into infrastructure financing companies, though they have right now a limited mandate. And the second thing that we like about this is that it becomes agnostic towards technology. You are agnostic towards which vendor won the tender. You don't care because ultimately the financing comes in through REC because they do have huge access to capital, large access to capital, and low-cost capital, being almost a semi-sovereign institution.
What about commodities? You've not mentioned commodities. You know, commodity again is a typical sector. You trade in and you trade out. As a fund manager, I know it's difficult to time, but this asset class you need to really time.
Commodities, yes, we do like the longer term story.
Which ones do you like? Metals, steel, non-steel?
Within metals, I think we like clearly aluminium because India has a huge competitive advantage.
Something like a
Hindalco, but at the right price. You're very right that we need to get it at the right price. We looked at Hindalco at 56-60 rupees. I think that's a good price to enter. I wouldn't be looking at it at the current market prices, primarily because I think the risks are quite high at this point in time.